Hi everyone, and welcome to the November edition of MENA Energy Insights. I'm Maroo, and this month we're going to go through a number of key issues covering the crude and product markets. So we're going to talk about rising global seaborne crude supplies, the impact especially with OPEC crude muscling out non-OPEC supply in Asia, some of the latest developments we've seen with Chinese stockpiling. On the product side, we're going to give an update on what's happening with the jet market. We're then going to turn our attention to gasoline, more specifically the flow from Europe to the Middle East. And then finally, we're going to round things up with some information about what's happening with the LR tanker market and the distribution between East and West of Suez. So without further ado, let's get into the first slide for this presentation. So what do we see in our latest data? When we look at global crude liftings, we can see actually that global crude liftings have been down year on year almost every month this year. However, since October, we've seen a pickup in loadings, and that's what you can see in this left-hand side chart with this red line ticking up, especially over October and November. For November volumes, actually, for preliminary data, we even see global loadings ticking slightly higher than they were last year. It's important to note here that when we refer to global loadings here, we're taking out some of the key flows which represent re-exports. So things like crude reloaded from Sidi Korea, from the Panama Canal, and also the intra flows, which have been increasing, especially since the startup of Upper Zakum flowing into the Ruwais refinery. Now, when we strip those out, we can see a lot more crude heading into the global market on a seaborne basis in November. But it's actually important to break this down on a regional basis. And that's where we can see what's happening on this right-hand side chart. Here we can see really the breakdown of who has been supplying more and who has been supplying less when it comes to a benchmark of the first half of 2022. So when we look at it on that basis, you see this big pink section on the right-hand side chart, and that really shows the decline in supply on a global seaborne basis from the Middle East Gulf. Now, you can see in recent months, October, and especially in November, that gap has really reduced. So the level of decline in exports from the Middle East is really narrowing. And the consequence of that on a total level is what you can see partly with this red line on the right-hand side chart. So here you can see in October, there was a pickup, especially with the return of Libyan supply. But that's also accelerated somewhat in November as well, as more barrels have come to the market, especially from the Middle East as well. So now let's turn our attention to what's happening with OPEC and non-OPEC crude, especially when it comes to key market of Asia. So here we're looking at what's happened with the capturing of market share by OPEC, particularly in the Asia market, at the expense of non-OPEC supply. And that becomes clear, especially on this left-hand side chart, when you see really, especially in recent months, that uptake on that blue line. The light blue line, in contrast, has trended lower. And that's really a function of more Middle East crude heading into Asia and specifically China. And we'll cover more of why that's happening in the next slide. But it's also important to examine what the impact is on a freight basis. And that's what this right-hand side chart shows. And here we can see really what's happened with ton-mile demand, especially for ton-mile demand to Asia. And there's a big difference here with what's happened with ton-mile demand for cargoes loading from the Middle East, which is the blue line. And then for the rest of the world, you see a real decline. So really from a freight perspective, those longer haul cargoes from North America, South America have really fallen, and that's impacted VLCC activity, whereas those Middle East flows have stayed much more stable and actually maybe ticked a little bit higher. So let's move on and focus what's happened in China. And here we see an interesting reversal of a trend that we had seen in prior months. And what we see here, especially in November in our preliminary data, is that China's crude imports have rebounded to a 13-month high. And this has been especially for grades such as those from Saudi Arabia and Iraq. So some of the key Middle East supplies pushing more into the Chinese market. And that's come, as we said in the previous slide, at the expense of other suppliers. And so really here, what we see is more Middle East crude heading into the Chinese market. But the question is this being refined or is this being pushed into storage? And that becomes clear on this right-hand side chart when really we look at what's happened with onshore inventories in China. And when you split it between what's happened with the total across China, and especially with storage held by Chinese oil majors. And there we can see the clear uptick in recent weeks. And that's part of this stockpiling drive, where there's a mandate to increase oil held in Chinese SPRs by 60 million barrels a day by 2025 March. And so that's really one of the key drivers allowing for more crude, especially from the Middle East region, to head into China. Now let's move on to the products market. And here let's turn our attention to what's happened with jet exports from the Middle East. And let's start with this left-hand side chart. And here you can see with this light blue line, we can see a pickup in jet exports between October and November quite strongly. Whereas for diesel exports, we've seen a clear decline from September onwards. And so really it's clear that Middle East refiners have been looking to try and capture some of this stronger jet regrade, particularly in Asia, and to basically improve the total refining margin for producing jet at the expense of diesel. Now, the question is how long this can really continue and how much this can really allow for more supplies in the market. And we'll cover that on the next slide. But at least on a Middle East perspective, when we look at what's happening with total clean product exports, we can see that despite the increase in jet fuel exports, total CPP exports have fallen in recent months. So October was pretty low and November continues along that route. And actually, if we look closer into that data for November, we can see Saudi Arabia has seen a decline in CPP exports. And that's tied especially to ongoing maintenance refinery work at the Yazref plant in Yanbu. And looking ahead, it's also worth mentioning that with the Kuwaiti Al Zour refinery under maintenance from December, that could also dent CPP exports from Kuwait going forwards as well. So now let's turn to what's happening with the jet market on a global perspective. And here on this left-hand side chart, what we've done is we've really combined the most important exporters when it comes to jet fuel. So South Korea, Kuwait, India, and China. And the key takeaway from this left-hand side chart is really the increase that's happened definitely since the start of Jan 2023, but also the plateauing somewhat that we see since this year. So really for these top 4 suppliers, there hasn't really been much of an increase this year when it comes to their jet exports. And probably there isn't that much room to add more exports from these suppliers either. Now, if we turn our attention to the right-hand side chart and we look at where else this potential extra supply in jet fuel could come from, well, the question is a little bit muted here as well. So if we look at where potential sources are, we can see wider Arabian Sea exports have ticked up, but the rest of the world, other regions really show little to no growth whatsoever. And the key observation here with the wider Arabian Sea is most of these exports are other Middle East countries, such as Saudi Arabia and the UAE. And of course, these countries, including Qatar as well, are contending with increased jet fuel consumption from their own domestic demand as they become growing and more important global trade hubs for passenger transportation. So really, in short, remains questionable how much more extra jet fuel supply can come on quickly at a global level. Now, let's turn our attention to gasoline. And here we want to talk about a short-term phenomenon probably, which we see happening in October, but also a phenomenon which has accelerated in November. So here we're looking at the flow of European gasoline, especially cargoes from ARA, pushing into the Saudi Red Sea region and especially to Yanbu. And this ties in well with what I mentioned earlier on with Yanbu refinery maintenance underway. And what this has done is created a window, especially for European gasoline exporters, to push larger cargoes from ARA and from other Northwest European ports and some Mediterranean ports as well into the Saudi Red Sea. And the benefit here is actually that because they're crossing the Suez but not going through Bab el-Mandab, they can conduct this trade with relative low risk. And it also allows for much needed alleviation of LR tonnage in the UK continent med market. Sticking with the theme of freight, the final slide here is really to look at what's happening with the LR market on a global perspective. And here we can see the impact of a phenomenon we've talked about in the past, which is these global long-range super tankers, VLCCs and Suezmaxes, cleaning up and taking diesel and jet fuel from the east to the west. So as these vessels have moved cargoes westwards, they've really reduced the opportunities for LR1 and especially LR2 tankers to move from east to west. And what that's done now is what you can see in this right-hand side chart, where really the distribution of LR tankers in the Atlantic basin has fallen. So with little flow heading along the east to west route on LRs, now we're in a position where Atlantic basin LR distribution numbers are low. In contrast, Pacific basin LR availability and distributions remain high. And potentially that could be something going forwards, which allows for more naphtha to be exported eastwards. But also potentially, if there is any pickup in diesel demand, then that could also allow for more diesel exports to continue if prices improve in the European region. So with that, I'd like to close the MENA Energy Insights for this edition. Thank you for listening, and see you in the next installment. Thank you.